Well, hello. I'm Janu Chan. I've been an economist for 15 years, which has included time at a couple of major banks. And I now consult and write a newsletter, Bite Size Economics, as well as manage my own funds. So, in the time that I worked at the bank, some of the best discussions I had was chatting with people on the trading floor. It really helped develop ideas, get some conversations going. And also, a few years ago, I enlisted the help of Patrick Reed to mentor me in my trading. And again, that also helped me talk through my ideas and we had some really great discussions. So much so that I thought subscribers in my network would really like to hear them. So Patrick, tell us a bit more about yourself.
Janu, thank you for inviting me on your show. It's amazing, thank you, and that's I'm very touched about what you said. When you came on board, it was a kind of two-way thing. I think I learned a lot as well from you, especially on the economic side. So yeah, I'm Patrick Reed. I'm a late career changer and co-founder of the Adamas Principle. We help late career changers, but we also we've been around nearly 10 years, and yeah, we basically give executive mentoring to retail traders who want to level up, but also institutional traders who just want a bit of fresh oxygen on the bike. We have buy side and sell side experience. My background's trading futures. I got thrown in on the bund desk in the Great Crisis, and then I moved to spot. My business partner Adam Gazzoli, he's 37 years in spot FX at a senior level, and yeah, we're nearly 10 years old in August, and we've just launched a new company in Dubai, of all places, Saudi Arabia. So exciting. Good, good, hopefully. But yeah, we're hopeful it'll be good. But yeah, so that's my story.
That's great. So speaking of Dubai and that region, I think this is the biggest topic at the moment, which has like I've spent the last since Saturday like glued to the news, trying to listen to experts about what's going on, and what is your reaction to the events and what's been happening in markets?
I'm very underwhelmed actually. I just had
Yeah.
a call just prior to you with a real commodities head, a proper seasoned commodities trader, and he had a different view. And I had to sort of say, look, trading physical LNG sort of as WTI futures. And I sort of said that in a kind of wry way because he's the expert. I'm not. I have traded WTI, by the way, but it's like, guys, it, the headlines you see in Wall Street and on the TVs would make you believe that this is absolute carnage on the markets. Well, it's not. It's absolutely not. FX
Yeah.
has moved a little bit,
Yeah.
dollars higher for different reasons. I mean, look at S&P, hardly anything. Well, we're still in a range for the last 3 4 weeks. Yeah, it's a bit weaker today. Um, sure, oil gapped up, but so what? People will talk about 8%. It's nothing,
Yeah.
right? Compare that to other oil crises. I mean, when oil goes, it really does. You know, compare and contrast with Ukraine. Things like this. So I think there's obviously when there's when there's something like this, there's a bit of hyperbole in the mainstream press and in the financial press, but in actual markets, it's just pretty muted, really. So yeah, I actually expected more, but we didn't get that.
I agree. So when I saw the screen on Monday and oil prices went down like 5% at that point, and my thought was the same, that this doesn't seem like a big reaction given that the scale of the attack, the fact that it's not just contained to Iran, it's actually spread the surrounding countries that have been involved too. I think markets are just expecting that this is just going to blow over really quickly. The other thing which I was thinking is that maybe a lot of people in the market now are so conditioned to buy on the dip. We saw markets just rebound very heavily after COVID, after every Trump announcement, the tariffs, Liberation Day. And so maybe there is some impression that this will be the same, but I think that there's a big risk that it isn't. There's a lot more unknowns here that is out of anyone's it's not in one person's control here.
Yeah, I mean, look, there's like with most things that you need a bit of balance.
Yeah.
And I think as I look back at what's happened at the weekends, I kind of get it. I don't think the market's that wrong. Now. I expected a bigger knee jerk. Maybe that would have fade, but what I do feel is the risk. If you look at vol, the risk, and if you look at carry, for example, say EM, the risk is really not priced in for any extension and any more carnage. So the focus really now is on the Strait of Hormuz and how those tankers can get through without being attacked. There is another thing knocking around about depletion of the protection missiles to shut down any attack from the US and Israel. In Israel's case, it's the Golden Dome. So there's that as well. And also, there's murmurings on the proxies, but we've had that before, with Lebanon and whatnot. So I think it's kind of contained. The big question is, ex-oil, is Iran important? Well, no. In economic terms, I have Iranian friends. I'm not saying anything else. It's only in economic terms. Well, not really. So the laser focus really on this week will be the Strait of Hormuz and if that still is being used. If there's any blockages there. Sky News did quite a good thing yesterday, I think it was. His name, with the economics editor, I think his name is Ed Nixon or something. But basically talking about a bit of a COVID playbook on higher commodities bleeding into inflation. You've got to be pretty high for pretty long for that to bleed in. And, if you look to the data post-COVID with inflation, is it transitory, is it not? There was no real, it wasn't, but there was no real, there was quite a long stretch of time and there was no real smoking gun, yes or no. So, you really have to have, and for me, it's oil, it's not just gas. You really have to have really high oil for a considerable amount of time before you get a massive spike in inflation. And I don't see, COVID was at least a year and a half. The highest bit, unless I'm wrong, but I don't see that happening in the Strait of Hormuz. I think they're going to sort that out pretty quickly, especially as the surrounding GCC countries have been attacked. As a result. So that's not winning them any favors. Iran is now put themselves in an extra special part of isolation. So I think that's where I sit on that.
Yeah. I guess my concern is that the conflict's just going to last longer than what people are anticipating, meaning that you could get a much more prolonged spike in oil prices. And not only that, you've also got LNG. And I think one other thing which I was thinking was that even in the lead up, like just before this happened over the weekend, there was a lot of concerns in the market, just that it was underpricing risk already before then. And so, okay, is the market still underpricing risk because this has happened? Or, when the dust settles, they'll realize that there is still a huge amount of risk that markets are not pricing in. And so I'm talking about, for example, the fact that, valuations are still pretty lofty in the US for a lot of equities. There's the concerns around AI capex, and then we also had the concerns pop up about blue owl and private credit as being a potential red flag. So, how you like I think is there still sort of an underpricing of risk at the moment, or is this just like because we've seen this big, I don't know, just such a big thing happen that's like it's taken all of our focus away from all the other stuff. We're looking at this war, and then people are just saying, and the market's gone, okay, well, we had the knee jerk, we just got to buy the dip. And then now that they've done that, what now?
Yeah, I think the war's a bit of a distraction for the
Mm,
problems, actually. Um, and it actually probably feeds into some weak longs, because you're going to get those people who go, well, we took a war, you know, let's buy those dips even more, right? Let's buy those structured notes, those exotics, and juice up our yields, right? I think, I was in Dubai recently, and I was at the Lombard Odier conference, the gala, and I spoke to a lot of high net worths and external asset managers. And the key word for me is protection, not just from my side, but for their side. They've had a great run, right?
mm,
So there are elements of the left tail that may not be fat, but they'll be medium, but more of them. So there's this sense of like there may be like a 7%er correction. There may be a couple of 10%ers. There may not be a 17 or 20%er, and it may not just bounce back. But there will be a lot more of those smaller ones, sub 10%. The problem really is not just should I buy the dip. It's really how's your P&L, how's your AUM when it does do 5%, like
yeah.
3 times in a quarter, for example. Are you leveraged up at that point, and then do you have to bail out? That could cause a proper correction. So I just feel there's a lot of unhedged stuff going on in equities. I'm not an equities guy. I mean, I look at it. I
Yeah.
used to trade it in futures, but I'm an FX guy. But I do feel there's this big kind of word protection. You're either hedged up to the nines or you're not. And I feel there's a lot not. And there is a lot of pressure from some private banks upselling structured notes. It's just a fact. You're going to get a lot of cream on that sale. So I think I'm quite worried for those, maybe, shall we say, lower end of the high net worth, say between 7 and 20 mil, who will be caught short. There will be the tide will go out, as Warren Buffett said. The tide will go out, and you ain't got any shorts. So that's the problem.
I remember when we were speaking, I don't know, it must have been at the beginning of the year, and we were talking about, and I think I raised some of these concerns um, about what could happen, and I think you said, "Oh, like to protect yourself from it with risk." Like it doesn't really matter what happens. It's more like you've had such a good run. Now's the time to sort of protect yourself. And actually, last week, because I think I was talking to you about this, I bought a bunch of put options on the S&P 500, um, sort of with that in mind.
Yeah, I mean, I think being the thing about being long vol is it it's just irritating, and I find that hilarious. Any kind of like if you go around any of the corporates, we tried it at Adamis. We went around a lot of like there was one food manufacturer we went to, probably the biggest food manufacturer in the US. Right, I'm not going to say any names, but you can work it out. A household name, and we were just chatting to the Treasury Department, and they just didn't and this was pre-Brexit, right? And they had a lot of exposure in sterling when cable was knocking on 150, and they just didn't want to know about protection, and they lost hundreds of millions because it was an irritation. It was annoying. It was just a little cost that, why would they do that? It's just a mindset, really. So, coming back to trading, not the corporate world, which is just kind of different. There's this kind of, having any kind of, not just buying into some insurance, but having any kind of, oh, well, markets always bounce back attitude is just going to hurt you. So being long volatility, getting in those puts, having hedging out by buying dollar. This is, anti-carry, taking a bit off the table if you're long and strong. These are just normal, healthy things you need to look at on a regular basis. So I just feel you get blinded by the light. You just do, and when it always bounces back, and it has done, you just assume it's going to do that. But as I say to my clients, markets can do anything,
Yeah.
and they have done.
I think it's, when you think that when times are good, you don't want to think of that possibility, that time, like that it will go wrong.
Yeah,
You're an FX person. So I
yeah,
did want to talk about the reaction with dollar and sort of I think I have read some comments about it returning to safe haven status. But I don't think that's quite correct because we haven't really had a big flight from risk. To me, it seems like more higher inflation, and also the fact that the dollar had been so beaten down, that had probably been overdone.
yeah, yeah. I agree. I mean, I think
Yeah,
what we're seeing now is dollar positioning. Everyone's short dollars, so everyone's long euros, and that's
yeah,
why it's going lower because they're trying to get out. So you've got this dollar short squeeze, and I'm not sure how long that'll last, but yeah, I mean that's it really. It's not like a look. It's convenient that it's dollar, but I wouldn't say it's a full on flight to safety, because of the other assets aren't moving so much.
that's right. The other assets aren't suggesting a flight to safety. So,
No,
uh,
I fully agree on that.
so yeah. With that, what are you looking at now in terms of positioning?
Well, I do like Aussie for a lot of reasons. It's just timing.
Commodities?
Aussie dollar.
Yeah, yeah, because
No,
is
not
it commodity story?
no, not at all. That's the last reason why I buy Aussie. I think the correlation with commodities and Aussie has kind of gone when the capex relationship left because they built the facilities there. So I say the same with CAD as well. So I think with Aussie, you've got the RBA, you've got sticky
You're
inflation.
right. You're right. I think that relationship broke down for a couple of years,
Mm. Yeah, I mean
and
it's nice to have
I don't know
higher
if
gold,
I don't know
higher
if
iron ore,
it's come back.
but it's not the reason really. It's a kind of nice to have. Yeah, I mean mainly it's diffs, interest rate diffs, and
Hmm.
projected diffs through the RBA being hawkish and sticky inflation. Macro's okay, broadly in Aussie, but yeah, those are the main reasons. And look, while risk stays contained and okay, and you've got dollar flip flopping, but broadly, I'm a kind of a dollar bear. That's all going to feed into more Aussie, and as you know, for a long period of time, Aussie's been battered and underpriced. Because bad news coming out of China, various reasons where other commodities, other currencies, when dollar was on its knees, were rallying hard, and Aussie didn't seem to get the memo and that's obviously changed recently. So there's a bit of upside. I mean, there's a big level for me, 71.46 on the weekly double top, and
Yeah.
if it breaks above there and closes, it's lights out for it's lights out for those shorts. I mean, it really is. It could go all the way to 74. I mean, and further. So that would be a huge shift in Aussie for me.
I'm gonna say, like, I'm not in complete agreement with Aussie. Number one, because I don't know if the RBA's got much more to hike from here. I think one max. And then it's always going to be a US dollar story that will dominate. And so I think that if you do have a Fed less inclined to cut now, and maybe more so if you do get an oil price spike, that's a story that's, I think, more likely to shift. Now I could be wrong on that. I just think that this is like a course correction hike rather than a turnaround to say we're hiking, we're in a hiking cycle now.
Right. Well, you could very well
Mm.
be right, Janu, and I
Oh,
don't buy
I
into
hope
that.
so.
It's not the
Yeah,
first time I'm wrong. I think sort of countering what you're saying is, don't forget, there's one thing hiking, there's jawboning hiking, and the fact
mm,
that they're everyone's cutting and they're not, ex Japan, that's enough for me. And you talk about, the last jawbone was inflation is a problem. We need to do something about that. I mean, it doesn't get as obvious as that. And the fact that the RBA are in a hiking cycle early and everyone else isn't, apart from Japan, of course, but they're so behind the curve, they're in front of the curve. That says a lot. And, talking about hikes in them, well, if inflation spikes, then they've got to do that. It's it's central to what they do. So, and the other thing,
yeah.
we've got two cuts on the Fed price. Okay, well that could go to one cut.
But yeah, but that's where I see the risk. That's something that could turn around, whereas you've already got one hike priced in for the RBA now.
Yeah, but some banks are saying two more.
Yeah,
You know, um, and I think if macro's still, they had a stunning jobs report not too long ago. Inflation's really sticky.
yeah,
You know, gold's bounced. I mean, it all kind of feels like that. If you say it's all dollar, that's fine. But look at where we are with dollar. Um, there's still political risk in dollar, which is not good. That's actually bearish. The move you're getting here is positioning post
yeah.
post that kind of politics. This is not because people like dollar. It's because they want to come out their shorts. So you know what I mean? So I just
Yeah.
feel, um, you know, how much more can you shave off that two cuts? There's no way they're going to be hiking. I mean, if you see anything, Trump has anything to do with it. So, two cuts maybe down to one in SOFR. It's been around two cuts for a while now. How much more will that translate into dollar lower, a dollar higher, sorry. So yeah, you kind of, I get it. I get what you're
I
saying.
think
It's about,
I think the other part is that yeah, I get what you also mean by positioning. It's just positioning, but I do feel as though like dollar's beaten down because of the political risk. And is that something that could turn around? I mean, that is the risk that could turn around, and then you've got all these shorts caught out.
yeah, but you're
And
not
then
going to. Well, Trump has to go. I mean, that's the only thing it's going to
I
turn.
don't think, I don't know if that's necessarily the case. I mean,
He won't change.
I
Won't
think that,
change his view.
I think it's a big deal that the Supreme Court ruled against him on the tariffs because it sort of said, look, US institutions, they're still intact.
Well, hold on. That's just one small element of the political risk in dollar is the tariffs.
Yes,
There's a lot
yes.
more, and we saw that at the weekend. So that's the key. That's the kind of thing. And this whole idea that US exceptionalism is on the wane. Buy a strike on treasuries, all that stuff as well. It all kind of folds into that. The tariffs is just, and also, he's just slapped on a global tariff. He'll find a way to do something else.
Yeah.
So look, I think the Supreme Court's spot on, amazing, great. I think
Yeah.
the Fed's kind of fine now. Walsh, will he turn up as a balance sheet kind of a QT supporter, or will he turn up with Trump programming in him? We're not sure. I think he's probably more balanced than like your Mirrans, obviously. But the thing is, it's like, well, yeah, there's still, even if they stop the tariffs, there's still a lot more to it. That's my take.
Yeah, yeah. I mean, I agree. I agree. I think it's just more, I just sort of see it as a directional, like, like if it's just more where the risk lies. I mean, how much more do you sell down dollar?
I think what's happened
Mm,
in the last 3 months is said there are other things other than dollar to trade,
yes.
like commodities, like
Yes, exactly.
RV, right?
Which
Coffee,
is what I
which is great
it probably makes sense to not go there and look
because
at
dollar's been a nightmare.
yeah.
You're either a bull or you're a bear, but for 5 minutes. Do you know what I mean?
But I guess
So,
like that's the politics of it, right? Like it's just become so unpredictable and you do have these narratives which keep changing all the time. It's exhausting. But it also means it makes it really hard to kind of hit currencies because it's very much a narrative driven.
well, you can trade RV. I mean, there's still really attractive, RV trades out there. So you could trade Aussie Kiwi. You can trade, and it's not maybe not sexy, but you could really just use that as a bit of a longer term thing,
Yeah.
you know,
Yeah.
and have that as a kind of cushion for other stuff you want to get involved with, like crazy stuff like metals right now. I always say, and I spoke to two prospects last week, and the classic was, you know, they had this system. It produced exceptional returns for 6 months, and out of nowhere, it stopped working, and they don't know why. And I said, "That's welcome to my world. That's markets. It's like, okay, nothing lasts forever." So dollar doesn't last forever. I mean, sometimes there's been times when whatever you can't put a foot wrong, right? And then all of a sudden, markets have got this really great timing thing where just the moment you're gonna, you know, lay on a bit of risk, it doesn't work out. And
Yeah.
that's the thing about surviving. I mean, I've been doing this for about 15, 16 years now, and getting quite late into it. I got humbled a lot in the early days when the Greek crisis was on. Um, yeah, it's just about regime change, um, risk management, of course, and just picking your spots, and not being too greedy, and just waiting for that big trend, which just don't happen. They don't happen that often, but when they do, it's
Yeah.
great. Yeah. how do you feel that macro's taken a back seat? That's what I want to ask you.
Uh,
Recently, anyway.
I think macro, as much as it takes a back seat, I think it still is important longer term.
Yeah.
So I'm looking at more longer term trends now, and I'm trying to, and I am avoiding a bit like some short term currency trading. Um, so I do think it has some part to play, and it will at some point. It will be more important, and I think it is still important. It's just that the noise around it with other stuff is just so great
Mm.
that it feels like it's taking a back seat, but really it's not. It's just because we're seeing so many shocks. But I think it's important to think of macro, because if the shocks aren't really having a macro impact, then you need to treat it as just some noise.
Yeah. I got another question. Do you think,
Yeah.
what do you think of US macro? For me, it's like, well, it's sort of semi in a soft landing process that we had a couple of years ago. Um,
Mm.
and it's fine, apart from the bit of a miss on GDP. Inflation, the Fed's basically
Yeah.
saying they're not worried. Jobs, we know it's pretty rubbish, but there's there's a bit of upside
It's
risk.
the last numbers were not terrible.
Yeah. What on
And
GDP? I thought it was one.
no, for jobs. For
Oh yeah,
jobs.
yeah. Okay, yeah, yeah, yeah. It was. Yeah. I mean, it's
And And the thing is, like, we were used to getting like 200 kind of numbers,
but the annual
and then
revisions were a lot lower though,
yeah,
and that's why
than
I mean,
expected.
dollar sold off eventually. It faded. It was a monster fade, which is
Yeah.
where I come in. But
Oh,
yeah,
but that there was another story going on in the background, wasn't it?
the Fed checking
Like,
prices.
was it Fed checking prices, or was
A
it
bit of that.
the
It was a bit of Dolly Yen there.
Japanese selling US treasuries or something?
Uh,
And the Chinese selling US treasuries. That story was going around too.
well, every little
Um,
helps, I guess.
yeah.
Whoever would, thank you, whoever it was. But I guess, look, the revisions were not great
Yeah.
on the year, but I mean, it was higher. But I guess, like with, broadly macro in the US is okay, right? Would you agree?
Yeah. It's not too bad. It's not as bad as what I guess some people making it out to be, particularly as a broader macro picture. Like I get the whole K-shaped economy thing, and that some parts of the economy are not doing so well. But as it is, the latest bit of data has been actually a lot more positive, not just with the jobs, but a lot of like the business surveys have started to turn upwards. So you're saying it looks like there is a bit more confidence within the
Mm.
business surveys, and also consumer sentiment, which was like down a lot, um, has also improved a bit too. I still think that there is one bit of concern still, and that is a consumer spending picture. Now that's held up,
Yeah.
but because the job market's been weak for a while now, you're getting to a point where like spending is really outpacing incomes. So that doesn't tend to be a sustainable kind of situation. At some point, you've got spending that's got to come in line with incomes and weaken, or you get some income boost somewhere which doesn't look like that's coming from anywhere anytime
Mm.
soon. So that's probably the one thing I'd be still watching out for if you do get some sort of weakness within consumer spending and then that will kind of lead to some sort of still sluggishness and question marks over the US economy. What could be a risk event that most people aren't thinking of?
Well, I think an explosion in inflation is not priced at all, and I
Yeah.
think the Fed flip flopping with the two parts of the dual mandate is fine. They do that. It's what they've done. They are behind the curve, obviously. I think they'll probably get with Warsh. He's trying to. I think he'll try and portray a balanced person
Mm.
for market credibility. And this comes, I spoke to an ex-Soros and Millennium trader about 6 months ago, and we kind of disagreed on. He was saying that dollar's going to follow the new Fed, and I was like, well, no, it's going to follow macro. So we had a bit of a kind of discussion about that. Now Walsh is in. He's like, well,
He has to prove himself a bit, right? Like
well,
he needs to be seen as credible. Like that,
but
no matter what his leanings or his ties to Trump, he actually does have to come across as credible
yeah,
to
but
the market,
we know
right?
that. But does he know that?
I'm sure he knows that. No,
Well, look at Scott Bessent. He was the voice of reason on the Treasury, and now he's a mouthpiece, right?
I don't know if
Paid well.
the Treasury Secretary is as important to come across as credible as the chair of the Federal Reserve.
What I'm saying, Janu, is that you know you could do whatever you want,
Yeah.
but if someone's pulling your strings, I'm not saying this for any, I'm not saying this for headlines, but you'll eventually do whatever that person wants you to do if they pull your string,
Yeah.
right?
I agree.
But the market has to believe it, and credibility is a believable thing, right? So that's that. I think Walsh is good. He's no Mirren, of course, and yeah, I think the market has got a good, and the market's kind of got good vibes about it at the moment, just because of the background. But yeah, he needs to. We'll see what he does in May, and that's the thing. If he starts cutting 300 basis points, well, it's going to be carnage.
Yeah.
So yeah, we'll see.
Yeah, and I think that goes back to the credibility part, right? Like if he goes ahead and he doesn't even need to be that extreme. If he's cutting even 50 and you do have inflation risks rising, that'll already have question marks over credibility, I think. And I don't know if that's helpful for anyone. Like I think as much as, even if Trump is pulling some strings, and even if he is more inclined to do what Trump says, I think there has to be at least, he can't go overboard on that. Otherwise, he won't have any credibility. That's a logical part in my brain.
Yeah, there you go. That's your mistake, Janu. Logic. You're bringing logic in, you see. Common sense and a lot of market experience. That's our downfall, you see. That's what we have to kind of put aside, put it in a box. We're in a different world now. But yeah, one would hope logic prevails, common sense, and adults remain in the room.
Oh dear. Well, I think that's a good time to wrap up.
Great.
Thanks so much.
My pleasure. Thank you.
Thanks so
always
much
enjoyable.
for coming on, Patrick. I think it's been a great chat.
My pleasure. Anytime.
Thank you. Thank you.
Thank you.